Hello, everyone, and welcome back to another episode of Majlis Markets. As always, I'm your host, Hassan Jivraj. Really happy to be doing another episode. I think we're on episode 71, which is really great for this podcast. And before we begin this podcast, please remember to like, share, and subscribe, and also leave us a rating wherever you're listening to this or watching this. And also, please remember to sign up to all of our social media channels at Majlis Markets. But now I'd like to introduce my guest for today's episode, Saad Malik. Saad, salamu alaikum.
Wa alaikum Islam. How are you?
Saad, Alhamdulillah, Alhamdulillah. Saad, it's really great to catch up with you. I first reached out to you actually before you actually launched Zoya. I know you launched it in 2021, but we actually connected in 2020 when I was working for an Islamic economy publication. And I think I might have been one of the first people who reached out to you when you were launching Zoya. You know, Zoya is very well known in the Islamic ecosystem, and it's probably one of the pioneers, probably is the pioneer, actually, I should say, of halal stock screening in the modern sense. And, you know, you've done a really interesting job with it, and it's done really fantastic things as well. But Saad, before we get into that and your thoughts about the stock screening and running an Islamic fintech in today's world, I really want to get a take. Tell me, what's your story?
My story, well, I've been working on Zoya full-time now since 2021, like you said. So been a full-time founder for about 4 years and change. And prior to that, I was part of another company called JP Morgan. It's one of the largest banks in the US. And I was working within the private banking division, so essentially building digital products for ultra high net worth clients. And I did that for about 4.5 years. It was my first sort of, corporate America, big company job. And prior to that, I was part of another startup, which was also in the fintech space. And that's really kind of where I got inspired for Zoya initially, because it was there that we were building a global retail investing platform. And we actually had two parts of the business. We had a kind of a B2C side where we had a retail investing platform, which I think we were doing it wasn't commission-free trading. That wasn't popular or yet at the time. So this was still $3.95 per trade or $4.95 per trade. And then Robinhood had just been announced, so the commission-free thing kind of just started blowing up after that. But so we had the retail side, but then we also had a B2B side where we were essentially building a brokerage as a service platform that would allow other fintechs and financial institutions to offer trading capabilities to their customers. So it was really kind of at that company. The company was called Drive Wealth. Pretty big company now. At the time, we were pretty small. But that's really kind of where I got the inspiration for Zoya initially and started kind of learning more about the space. And then, of course, that sort of developed over time as I was at JP Morgan and so on and so forth. So it's been a long time in the making. And, my background is not in finance, despite, having worked at these two companies and then now also running Zoya. I'm a tech person at heart. And I've always been a techie, self-taught, been building websites and stuff since I was 11, 12 years old. And so I always knew I wanted to do something of my own. And I just would have never thought that it would be in the finance space. It just sort of happened that that's kind of where things led me to. So that's kind of the background there.
Amazing. And Saad, when did you first hear or come across Islamic finance?
So, when I think I was 16 or 17 years old, there was a conference that happened in New Jersey called the American Muslim Consumer Conference. And it was the first of its kind. It was basically a business conference around this idea of recognizing Muslims as a consumer segment. And how do we talk about the business of that, and how do we get the right people in the room together? Professionals, companies like Walmart and Nestle and so on and so forth that are already servicing these types of customers. How do we kind of formalize that into an event where we can talk about this as a market opportunity? And so I didn't know anything at the time. I just went to the event and I got very inspired, so much so that I ended up joining the organization as a volunteer. And basically, I ended up sticking with them for almost 9 years. So, I played a pretty critical role. I became the chair of the organization. I transitioned to a nonprofit organization. We did a number of different events and startup competitions and such. In fact, there's a lot of, companies today that essentially launched at AMCC. So LaunchGood, for instance, was a platform that was introduced for the first time at AMCC, which is now obviously kind of one of the leaders in the Islamic economy space, if you will. And then Muzmatch, or it was called Muzmatch back then, now called Muz, they had also presented at our entrepreneur showcase startup competition. So yeah, I mean, like I was surrounded by that for several years, and I sort of knew that like I need to do something in the space. I just didn't know what it was. And so when the opportunity came for Zoya, not really the opportunity, it was really kind of more so something clicking in my head, like, okay, well, this is interesting. I'm kind of building at DriveWealth, I was building this platform, and I thought, hey, as a Muslim, how does this relate to me? And how would I navigate that? And so that's initially kind of what started my curiosity. And, after spending several hours, days, weeks Googling and learning about Islamic finance principles and Sharia based screening and trying to wrap my head around that, I felt like, okay, this is definitely a space that needs some sort of a solution that's like kind of modern, tech forward, that sort of a thing. Because I was personally left more confused at the end of my research than I did when I first started, just because there's like all sorts of different opinions and different perspectives. And it's like, well, how do you navigate that as a retail investor? And really, there was no way for you to do that. At the time, there was really no platforms that were servicing Muslim retail investors. And so I think that's kind of what gave me the inspiration, the motivation to want to do something here. First and foremost, to really scratch my own itch, right? It's like, okay, I want to manage my own portfolio. How do I do that? But then, quickly realizing that this was a problem that many, many people had. And that's what inspired it.
Interesting. And like Saad, like why do you think stock screening is important for Muslim consumers or for like a Muslim investor or someone who wants to invest in a Sharia compliant manner?
Why is it important? Well, I mean, growing up, we were taught that Islam is a way of life, right? And so it was simple enough that okay, we understand that we can't eat certain things, right? We can't partake in certain activities. But when it came to your finances, I think for most people, just because financial literacy is something that most people lack by default, it's this kind of huge gap in your knowledge of like, okay, well, what do I do, right? So there's the first step of like having some basic financial literacy, and then there's a second layer of like, okay, as a Muslim, how do I apply these things? So that's really kind of what how I made sense of it. And it was really just kind of transitioning from this idea that, which again is what everyone, I would say most Muslims understand, is like, okay, interest is bad and you should avoid interest. And I think that's really kind of the extent of knowledge that people have when it comes to finance, Muslims in particular, obviously. But beyond that, it's just a big question mark. And so that's where I felt that we do need not just tools, but education around, what is Islamic finance, Sharia compliance, how does it work, why do we even need it? And the idea ultimately is to help Muslims align their values with their money, right? And this is just kind of one way to do that. And it's by no means perfect. I think we recognize that, and we can talk about that as well. There are concerns about doing certain things a certain way, but I think it's recognizing the fact that this is a process that is constantly evolving, and much of what we see today was the result of scholars coming together, about a decade or 2 decades ago, and saying like, okay, these are the challenges Muslims are facing, especially in Western countries where they don't have access to Islamic finance products and such. We need to give them some sort of baseline framework that they can use to navigate these products. If we don't, they're either going to partake in things that are outright haram, that are impermissible, or they're just going to be afraid and not engage at all, which could also be harmful in the sense that, now Muslims are at an extreme disadvantage when it comes to, building wealth. So that's kind of where these guidelines came together, and they were based on kind of what was available to those scholars at the time. And I think over time we've seen that they are evolving and there are continued discussions, and the goal is to get closer and closer to something that is more Islamically sound rather than kind of creating these band-aid sort of solutions on top of the existing infrastructure or existing conventional products that exist out there in financial services.
Just leading on from that, Saad, something that just came to my head was like, what do you think are some of the practical challenges Muslim investors face today?
One of the things that we see often, and I think this was sort of an unintended byproduct of what we built is that prior to Zoya, there was really no retail investors didn't have access to Sharia compliance data. So it was, if you were investing in stocks, individual stocks, you probably had to like do the research yourself and try to make sense of the Sharia compliance and whatever. And maybe you had the time to do that once a year or so. So you're always kind of like lagging behind a bit. Or you would just invest in an existing mutual fund, for instance, that already was Sharia compliant, and they would manage your money for you. So when we made this data available to everyday investors, now all of a sudden you had access to up-to-date, actionable data that's being updated on a monthly, quarterly, whatever basis as companies are reporting new financials. We realized that the unintended kind of consequence of that was now investors are buying stocks because they're compliant, and then all of a sudden, maybe a couple months down the road, it's not compliant or something changes, and now they're like, wait, what do I do? Like my goal was to invest, for 20 years, 30 years, but now all of a sudden the stock in my portfolio is no longer compliant. How do I go about, like, what do I do now, right? What's next? And because they had access to this data now, it's empowering, but at the same time, you're like, okay, well, this is a little bit intimidating. Like, do I sell? What are the implications of selling my position? Are there tax implications, and so on and so forth? Can I hold on to it to recoup my investment if my investment is down, for instance? All sorts of these questions sort of start popping up. And so I think that that's been very interesting to see. And we've been obviously forced to address that in some ways, whether it's, kind of building more educational content, collaborating with scholars to answer those questions, or just like being more proactive in kind of building features that address that before those questions come up. So like as the user is managing their portfolio within Zoya, we kind of surface these things up along the lines to help them make more informed decisions, right? So just because a company is marked Sharia compliant doesn't mean it's a good investment, right? And just because it failed Sharia compliance in its most recent quarter doesn't mean that you need to cross that company off forever, right? Like it's going beyond kind of the status update and learning more about the why behind something before you decide to take any action. Is a company perfectly halal permissible when their interest-bearing debt ratio is 29% and then perfectly haram when it's 31%? Like that sort of thing is what we want people to understand. Like that's not how you should be thinking about this. You should really use this as a set of broad guidelines to help inform your investment decisions. And there's a number of other things you should also be looking at when it comes to determining whether or not something is a good investment for you.
I think one of the things that's interesting for me, having covered the industry since 2013, just the variation of standardization standards and standard setters. You can talk about AOFI, the Accounting and Auditing of Islamic Financial Institutions based out of Bahrain. You can talk about the Malaysian standards. You can talk about MSCI. How difficult is it, do you think, to standardize in this industry, or rather, for a Muslim investor, how difficult is it to choose which standard is probably the best for them?
That's a great question, and something that I don't think that there is a direct answer for. The position that we like to take is help the user, give the user as much information as possible, and then empower them to make their own decisions. I believe it's a Warren Buffett quote or Charlie Munger, I forget who said it, but the famous quote is invest in what you know, right? You should never be investing in something that you don't understand. And I think as Muslims that extends that's an important thing, but it goes even further to say like, okay, well, I should understand this not just from kind of a pure investment standpoint, but also from an Islamic standpoint. Like, why is this deemed compliant? What are the rules that deem it compliant? And do I align with that? And so one of the things that we introduced earlier this year was that we rolled out support for multiple Sharia standards within our app. And that was many years in the making. This is something we've wanted to do from day one, but we intentionally didn't because we felt that the community wasn't ready. I think it was important that they started with something that was simpler to kind of understand what are Sharia standards, how do they work, kind of get some experience under their belt, if you will, through kind of one methodology before they start exploring these other ones. And so now in Zoya, we cover up to, I believe, like 6 different methodologies, and we try our best to present it in such a way that the user doesn't feel like they don't feel overwhelmed by it. It's more so like, okay, this is a few different ways of looking at this company. And these are the differences between the methodologies. They're largely trying to do the same thing. They're all loosely based off of the AOFI guidelines, but there's just a few different sort of minor variations, whether it's one methodology may say that interest-bearing debt should be 30% of market cap, another may say it should be 33%, another may use market cap in the denominator, another may use total assets in the denominator. And so just helping users understand that and what that means, I think, has been important for us. And ultimately leave it up to the user to decide whatever they're comfortable with. And what we've seen is some people align with certain methodologies. Some people say, hey, as long as it passes any one of them, I'm good. And some people say, well, I feel better if all 5 or 6 of them pass, and then I would feel comfortable investing in it. And that's okay. That's all the power to you. We're just giving you all the data and the information and the education that you need to make that decision, and helping them understand that that's completely fine. That there's some people kind of draw us or call it like fatwa shopping, if you will, but I don't think it's the same thing. I think this is these are not individual fatwas per se. I would say they're kind of more simpler than that. And if you look at the board of a lot of these methodologies that exist out there, they all share some scholars from one methodology, from one standard to another, and a lot of them are AOFI based scholars. So it's like, all right, well, clearly it's all coming from the same place. They're just creating these minor variations to serve that specific purpose for that index, for that product, or whatever. And they're all scholarly approved at the end of the day. As long as those boxes are being checked, you're okay. You can pick whatever you feel comfortable with, and that's what we try to help users understand.
I mean, if you read Reddit forums and if you talk to people, even from, if I give it anecdotally, people, say, who are these scholars? And I think like most things, with there's never going to be a full agreement with people. And AOFI, to their credit, have done a good job in trying to get all the different madahib together and try and come to some kind of consensus. I've seen this with my own eyes when I went to the AOFI conference last year, and also when I interviewed Brother Omar Ansari, who I'll link it in the show notes. But Saad, in terms of like convincing people, like, I mean, if we take the AOFI standards, which is probably the most recognized in the industry and the most used, I would say, some people can debate that, but like the AOFI standards, they're the most widely known standards. I mean, some people have said to me, looking at, if you look, for example, 30% of the debt can't exceed market cap. Now, someone would say to me, okay, market cap, but that's not really based on how the performance of the business is doing. That's more based on what the market and the share price is doing. I mean, do you think there are some flaws in some of these standards?
Yeah, I mean, look, absolutely, there are flaws, and I think that's kind of what I alluded to earlier, which is that scholars came together, they created these standards based on the kind of the data, the tools that they had access to at the time. And we would like to see more active discussions around how can we. I think the worst thing that could happen is we accept these things as like something that's just forever this way, right? I think that would be doing a disservice. And I don't think that that's the intention of the scholars either. That's the whole point of why, the AOFI conference happens on an annual basis. All sorts of these scholars, they come together, they're actively discussing these topics. I think they recognize that this is not a perfect solution, but it's something that will need to be evolved over time. And ultimately, like, you can see this as kind of a band-aid solution, right? Because you're taking companies that are not designed to be Islamic or Sharia compliant, and you're trying to apply these guidelines on top of them to screen them and whatnot. So it's not going to be a perfect solution ever. Sure, there are some companies that align better with Islamic values than others, but if you become too strict with the criteria, then you're essentially ending up with like 10 companies in the world, right? And so scholars also recognize that that's also just not feasible, right? And so we need to keep the guidelines broad enough so that they're practical, but at the same time, let's aspire to do more than that. This is just kind of a baseline starting point. You should do additional research and additional screens to make sure that it does align with Islamic values, or at the very least, it's not going against Islamic values or hurting Muslims, right? I think that's an important aspect of it. And then also exploring other products outside of the world of stocks, right? I mean, stocks isn't the only way for you to build your wealth, right? I think we're seeing a lot of interesting stuff come out of the crypto world when it comes to kind of Islamic focused products. And I think that's the motivation behind that is Bitcoin and these other currencies, they're essentially not they're not tied to the conventional financial system and all the problems that are associated with it, right? So you kind of have this like fresh, clean slate that you can begin with and design something from the ground up that is much more closer to Islamic values than trying to screen a company like Apple or Tesla and so on and so forth, and calling that Sharia compliant. So yeah, I think it's something that is evolving, and we hope to see more advancements in the space. And we're doing our part collaborating with scholars and surfacing up these issues to them. And then we're also trying to be as creative as possible as well to help users understand that, okay, Sharia compliance as it is today, first off, it's an industry term, right? Like, what does that actually mean compared to calling something, halal or haram, right? Understanding what that actually means. And then, what are other things that you should also be looking at as a Muslim to determine whether or not this investment meets your values. So that's not the only Sharia compliance is not the end all be all of it. There's more to it, and we're just doing our part and trying to surface that up to users.
Yeah, I think the one that triggers a lot of people is the 5% impermissible. A lot of people question the the origins of this hadith that's used by scholars. And I think Faraz Adam, he did a good summary of that, and other scholars as well have also done that as well. Saad, one thing that's interesting is that there's this new standard that AOF is trying to publish. I don't know if you obviously might have heard about it, Sharia Standard 62, which pertains to sukuk, and it could make sukuk into more of an asset-backed security, arguably making sukuk more Islamic than what they are now, or what's in the market right now, let's say. And that's really shown to me over the past couple of years or the past 18 months is that there's a big divergence in different markets in the way they look at AOF and the way they implement AOF. I mean, do you think it just depends also on the regulator as well in different jurisdictions?
Yeah, I think one thing we've seen in this space is a lot of organizations drop the AOF name, but if you were to compare them side by side, you would see differences in the way that they are doing things. And I think part of the issue is that, or part of the reason why that's the case is, AOF is not out there certifying products, right? AOF doesn't offer certifications. They publish these guidelines, and they offer training to scholars, and so you can work with scholars who have obtained those certifications and qualifications to be able to call themselves AOF certified. But the products themselves are not being certified by AOF, and there's also nobody that is enforcing that either, right? So if someone says that, hey, I use AOF guidelines for this product, there's no regulator out there that's like saying, okay, well, is there some certification you can provide or whatever? You can't. Typically, the certification comes from like a Sharia advisor, Sharia auditing company. But again, they're independent from AOF, right? So even they are kind of applying their own interpretations as they are doing these things. So I think there's always going to be some variance, right? From one Sharia advisory board to another, from one company to another, even though that they're all calling it AOF, there's going to be different interpretations of it. And that's can be seen as a problem just because, there's like inconsistent application of the guidelines. But at the same time, it also kind of, I would say, fits into how Islam is designed to be. Like there is difference of opinion, right? And we accept that as a thing within our religion design. Like it's not a bad thing that there's scholars who interpret one thing differently than another. I think again, going back to what we were talking about earlier with the various different methodologies that we introduced in our app today, I think that helps people visually illustrate that, right? Like just kind of helping them understand that, okay, clearly these 5, 6, 7 methodologies, they're all trying to do the same thing. They're just taking slightly different kind of angles and perspectives, and one is not necessarily better than the other, right? I mean, you could argue that one methodology maybe perhaps applies better to certain products than other methodologies, or maybe performs better in certain market conditions than other methodologies. That's okay, but beyond that, they're all trying to do the same thing, and that's okay.
Why do you think users get confused or criticize these stock screeners? Not just specifically to Zoya, but generally speaking. Why do you think a lot of consumers or users still, even today, with the great work you guys have done and others have done as well and are doing, why do you think users still find this confusing?
I always tell people that we operate at the very sensitive intersection of faith and finance, right? So these are the most sensitive areas for people, for Muslims, money and religion. And as Muslims, we take our religion very seriously. And so I think that is something to be expected, and that's something to be embraced, that you will see a lot of critics, and you will see people asking hard questions, and you need to be prepared for that. Like, the worst thing you could do is not be honest with yourself about the fact that these are not perfect solutions, and that even scholars are not entirely comfortable with some of with the way some of these products today are structured. But they are actively doing their best, and there are going to be some bad players in the space who are just out there to make some money, and they will find any way to mark something as compliant or halal, and just to be able to sell it and make some money off of it. So I think trust, it comes down to kind of trust and integrity as well. But ultimately, we embrace that. We are very empathetic towards the community when they ask these tough questions, when they push back. We give them, again, just very transparently about, like, okay, this is how it is, and this is why scholars say something is permissible or not permissible. And ultimately, it's up to you. That's fine. You don't have to agree with it. That is totally fine. I think it becomes problematic when creators of these products, the companies behind them, try to push back, and they say, well, we work with so and so scholar, and you should trust them. They have all these certifications and qualifications and so on and so forth. And I think that doesn't come off authentic to people. You're better off just sort of admitting that, yeah, this is not perfect, but this is why it exists this way, and these are the scholars behind it, and you don't have to agree. That's totally fine. And so we prefer to be as authentic as possible when it comes to that, and I think that's why we've had there's a lot of trust in the community when it comes to our brand, and we're very proud of that. But I think there's plenty of people out there who don't come off authentic and are doing a disservice to the community by kind of speaking about it in such a way, or like fighting back and pushing back. And I don't think that that's going to work. You have to be empathetic, and you have to have a thick skin, basically, because we get it all the time, especially if you're building a retail product. I mean, there's a lot of people who support us, who say good things, but anytime someone says something bad, that hurts a lot more than the good stuff. And so you just again have to remind yourself why you're doing what you're doing, what's the greater purpose you're serving here, and that's the only way that you could function as a founder within this space.
Yeah, just not to go too much on it, but I came across a video online of a well-known sheikh in Saudi Arabia who mentioned you guys, and I thought, although he was being very critical of you guys, I thought that's probably the best marketing you guys can ever get from this guy.
Yeah, I think I tweeted that. I said it's like being featured on Joe Rogan, but the Muslim version of that.
Yeah, exactly.
Yeah, no, I mean, look, and it's so funny because you mentioned that video. That same scholar, if you go back to some of his older videos where people ask similar questions about investing in stocks and the Sharia compliance standards and frameworks that exist, he was extremely critical, to the point where this is basically all haram, right? What do you mean that you can have 2% or 5% of interest income, whatever? Like, any interest is bad. And so again, that's not to say that he was wrong, but you could see that his understanding or his opinion also evolved with time. Where, like, in the video that he mentioned us, I think the way he spoke about it was a lot less aggressive, and a lot less critical compared to some of his previous content. That just goes to show, like, not all scholars are created equal either. Like, you can't just go to any scholar and ask these questions. You can't go to your local mosque and speak to your imam. He's probably not trained in this space. So I think it's important to find scholars who have spent time studying this particular topic, who have experience within the financial world, to be able to provide guidance Otherwise, you're just going to get left more frustrated and confused at the end of the day.
Yeah, what's interesting is that if you actually look at the number of Islamic finance scholars or scholars who specialize in Islamic finance, there's not that many of them. It's growing compared to what it was, say, like a decade ago, but it's still quite small. And you're right. If you go to like a mainstream scholar, such as this gentleman who is not too well versed in Islamic finance, let alone finance, I think they'd probably say, they'd have a very negative view. But those who are more versed in finance and Islamic finance would probably take a different view on that. Saad, I just want to change gears a little bit and talk about Zoya. How do you, like, I've used Zoya's app before, and maybe some of the listeners and viewers have used it before, but how does Zoya, practically screen stocks for those who don't know too much?
Practically, so I mean, we've talked about the criteria, that we apply to our screening, but we are, tech guys first and foremost, and so when we were thinking about this problem and how to go about solving it, what we didn't have access to was capital early on, right? And so typically, if you look at the way that the industry has operated and still largely operates, is that you hire a huge team of analysts. And these are people who will manually sift through financial documents and extract data and numbers and crunch them to basically apply these Sharia compliance criteria and then determine whether or not something is compliant. So it's a largely manual process, and that's why it has also cost a lot, historically as well. Like before Zoya, again, there was nobody doing this on the retail side. The incumbents in the space were just focused on institutional clients, B2B, but not retail, and it came with a hefty price tag. So in our case, in order to make it available to retail investors, we had to rethink the approach kind of from the ground up. And so what we ultimately landed on after several months of experimentation was that we figured out a way to automate much of the process, the majority of the process, and still end up with a data set that would be comparable, if not better, than the kind of the leading incumbent providers at the time. And we know this because we attempted to actually partner with some of these providers early on, right? So our goal was never to be the screening data provider. We wanted to actually build an investing app from day one. And we thought, okay, well, we're just going to be the tech layer, and we're going to consume data from the data provider. We'll plug into certain broker APIs and essentially we'll put it all together and create this investing app. But when we spoke with some of these providers, we realized there was a lot of gaps in their data. There wasn't much transparency. It was extremely expensive. So if we wanted to build a retail platform, the pricing that they were proposing would have been like insane. We'd be paying hundreds of thousands of dollars, millions of dollars if we, grew to, the scale that we're at now. So we knew that we had to come up with an entirely new way to keep our costs low and then pass those savings on to the user. And that's kind of where we were able to automate a lot of that. And so the way that it works in the back end is it's basically a combination of taking publicly available data sets, some proprietary data sets, and effectively kind of creating our own algorithmic screening approach, which was looked down upon for a very long time in the industry, I would say. But, I think if anything, we're the ones who validated that it can be done in a way that is effective and accurate, so much so that, the results are better than, again, what the incumbents are able to provide, because we believe humans are sometimes extremely unreliable and humans can miss things. And so now with the the kind of the advent of AI and all the kind of different solutions that are out there now with LLMs, you can take that to the next level. So everything we've been doing historically we didn't use AI for that. It was just kind of very clever sort of algorithmic based screening, combination of screening different data sets and stuff. But now with AI, we can get even more granular. Like there's so much that you can do now that you don't need to rely on human analysts to extract information from financial documents and kind of make sense of different data inputs and so on and so forth. So that's how we've been able to kind of do it practically on our side. We don't have a single analyst on our team, and we're very proud to say that. We do have checks and balances in place to ensure that there aren't any errors in the data. If there are errors, they typically get corrected very quickly and they don't happen again. And we work with scholars to ensure that that process is also being done in a sound manner. And they do audits of our data on a regular basis to ensure that everything is the way it should be. So I think that's kind of the best explanation for how we do it on our side. And I truly believe that that's like, if you're a data company today, any kind of a data company today, and you're still relying on human analysts, I think you're like so far behind, and really the economics won't work in your favor, because we've made this data so affordable in the marketplace. And honestly, we our goal is to make it free, like actually free. Like to some extent, it is free today in the sense that you can download the app for free and access the latest Sharia compliance status of any stock within Zoya for free. But we still charge for the full reports. And our goal is to even make that free as well. And the way we would do that is by focusing more on the B2B side of our business, growing that to the point where we can subsidize it for retail investors and make it effectively free for them. And that kind of a model, again, like if you're taking the same approach that some of these other incumbents are still following with these large teams of analysts and whatever, their costs are scaling, right? They don't go down with time, and so they just can't do that no matter what. So
one of the things I wanted to ask you, Saad, when I told people I was interviewing you, was that in Zoya, sometimes you do get, like, you don't get definite yeses and nos on something is halal or not. Why do you not provide a clear yes or a clear no? I know, obviously, in life, things are not always black and white, but like if there's a questionable, if you read Reddit forums or if you talk to people who invest in Sharia compliant investing, they always say Zoya is always like saying, well, this is questionable, or this is, it's not entirely clear. Why do you do that and not just provide a clear yes or no?
yeah. Well, when we looked at the data that was out there, working with some of these incumbents initially, when we were trying to kind of evaluate, what their data looks like, we noticed that it was always binary. It was always compliant or non-compliant. It was always pass or fail. And that raised some questions that we had, and obviously, naturally, retail investors would have the same questions of trying to understand companies that are conglomerates, for instance. They have a variety of different business operations, right? And so it's possible that their core business segment is compliant, but they still are operating certain lines of business that may be problematic for some investors. So I think one of the examples that kind of looked at the time was something like Google, right, or Alphabet. Their core revenue source was search advertising, and they have obviously a number of other products that they make money from, whatever, but that's still the bulk of their revenue comes from that. And there's nothing inherently wrong with advertising, right? Their service, they're offering a platform, and Islamically speaking, there's nothing wrong with that. Where it gets problematic and concerning for people is that, okay, well, what are they promoting on that platform, right? And so, of course, you can find products and services that are un-Islamic in nature. You can see ads for things like pork-based products or certain entertainment products that contain objectionable content, and so on and so forth. And if you actually analyze their advertising policy, you'll see that they do allow certain categories that are clearly problematic from an Islamic standpoint, right? And they may not allow them in all jurisdictions, but they do allow it to some extent. And so as a Muslim, if you're reading that policy, you're not going to feel comfortable per se, right? And so we thought, okay, well, this is a tricky one because, again, it's like there's arguments on one side to say that this could be compliant, and there's arguments on the other side that could say that this is impermissible. And so why don't we inform the user that this sort of difference of opinion exists, and then leave it up to them to see whatever they're comfortable with? And that's kind of how we birthed this term of like questionable stocks. And that was kind of the third category in addition to compliant and non-compliant. And we were the first to do anything like that. And so we started surfacing up, companies like Alphabet, like Facebook. And then there were some other kind of interesting companies that also popped up where, maybe it wasn't like a difference of opinion. Maybe the company just didn't disclose enough information yet, right? Like we know that the company intends to operate in a certain industry, but they just haven't disclosed enough information about it. So we would try to highlight that as well as best as we could and help the user make a more informed decision. Personally, I'm not fully content to this day with how we handle questionable stocks. I think we could do a better job at explaining that and maybe create like different categories of it. But I think overall, most investors have found that to be a valuable kind of a value add in terms of helping them navigate investments.
One of the things that's also interesting is if you look at movements like BDS and other ones, I think here in the UK they've been trying for the Tayyib initiative, which is I know certain bodies have been trying to push that forward. And Saad, if you think about it, right, most people they don't think the whole process; they only look at the end product. So, like for example, if you go into a restaurant, I can imagine most people are probably not going to be asking, how was the animal treated during its time before slaughter and the way it was slaughtered and all these other things. So it's like a process. So, like in regards to things like BDS, do you think like these screening or screeners or screening process takes into consideration things like ethics, BDS, and other kind of movements?
It's a really important topic and
Because
something that
I'll only say because I remember a couple of years ago there were certain companies which were pushing AOFI to introduce BDS, not BDS, but like more ethical standards within the screening framework. I don't know how far they've got with that, but they seem to have not put it on the back burner. So I was just wondering.
yeah, and I think so. You have to understand, like, the reason why companies were pushing AOFI to do it is because as a company, you can't just come out and say, "Oh, we're offering products that boycott, Israel," for instance, right? You can't position yourself or market yourself as like a BDS friendly product because there are in certain jurisdictions, like in the U.S., for instance, there are very strict anti-boycott laws that apply to corporations. And so, that's on kind of the legal side of things, but then also, of course, there's the public backlash and, certain, just becoming a target and so on and so forth. So if AOFI is the one who, adopts those guidelines, then we don't have to mention that. We just say, oh, we're just using AOFI, and then, that kind of fixes itself, the issue, right? It is a tricky thing. I don't know if AOFI can solve this. I don't know if it is meant to live in that realm. For us, it always made sense to separate those two things. And so help users understand what are Sharia standards and what are they trying to solve for. Okay, that's one thing. And then there's all this other stuff that you should also be screening for, right? It's not just, whether it aligns ethically with your values, but it's also like, is the company like, financially sound? Is it actually a good investment? All those other factors that you should be looking at when analyzing an investment. So separate those two things. So a company could be compliant, but then still be flagged for some of those ethical concerns, or a company could be non-compliant and, be ethically very much Islamically aligned, right? I'll give you a perfect example. There's companies that are like, early stage, biotech companies that are maybe, trying to, create something like a product for like cancer patients or something like that. Very Islamically aligned in terms of its mission, right? However, because they're pre-revenue, most of their or the only income that's reported on their financials is from interest, and that's because they raised a bunch of money. It's parked in these in the bank and short-term investment products, whatever, and that's yielding them interest income. And so if you look at it from a pure Sharia compliance kind of angle, it would fail compliance because 100% of their revenue is interest income. But from a kind of an ethical alignment standpoint, of course, it's something that you would want to support. So that creates a very interesting sort of dilemma. Like, okay, how do I approach something like that? And on the other side, of course, you talked about BDS specifically and kind of what's been happening in the world. Yeah, people want to put their money where their mouth is when it comes to their investments. And I think it's wrong to lean too much on the Sharia standards to solve that problem. I think it's platforms like us that just need to be more creative in helping investors navigate that. And so one thing that we did was we launched a feature called Controversies about 2 years back, and we sourced the data for controversy. So the idea behind controversy is we highlight any company that is involved with human rights violations, whether that is across illegal occupation, whether that's around illegal border activity or kind of for-profit prisons and so on and so forth. There's a few different categories of that, and we source this data from reputable organizations and make that available to our users within Zoya, so they can see that something is compliant, but then have these additional flags for kind of violating some of the human rights stuff, and that ultimately allows them to kind of make their own decision. And we've created filters around it as well, so we make it super easy for you to see those flags in the app. And so ultimately that's up to the individual investor to decide how comfortable they are with a certain type of investment, or how much they want to screen beyond the Sharia compliance aspect of things, kind of the baseline Sharia compliance for that, additional ethical alignment. That's how we're approaching it, and so far it has worked well for us. We've gotten positive feedback, but I'm sure that there are better solutions for this.
I mean, one thing that I'm thinking about is like if you look at ESG, for example, the evidence of where if you adopt ESG principles and returns, there seems to be this big pushback now, obviously with the election of Donald Trump, and people like Larry Fink and Jamie Dimon are now going against ESG or putting it on the back burner. Do you think there is like this kind of I don't want to say conflict, but I want to say like this kind of overemphasize on ESG over ROI? Because at the end of the day, investors are looking for a return. It's also about ethics. Like the evidence doesn't seem to stack up.
Yeah, I can't speak too much to the ESG world. I mean, we've obviously explored that on our side as we were thinking about the controversies feature. Like, how do we go about that? And does ESG solve those problems? And I think initially most people assume that, okay, well, ESG should be Islamically aligned, like kind of what it's trying to do. And so if a company is both Sharia compliant and then also positively scoring on with ESG, then that would be, kind of the best type of investment. However, if you look at kind of the various different ESG screens that exist out there today, there's obviously the big players like MSCI and so on and so forth. There's a lot of inconsistencies, right? So we talked about like inconsistencies within the Sharia standards. I would say the ESG world is a lot worse. The Sharia stuff is still like largely similar in what it's trying to do, but the ESG world is very different. And I think at some point ESG started to get a bad look because they were penalizing companies that could be argued are doing good in the world, and then promoting companies that are supporting certain things that may not align with you ethically. I remember at one point, like Tesla, for instance, was like getting a very low score on ESG through one of the ESG kind of screens. I forget which one it was, and there was a whole kind of PR thing around that for a while. Basically, people calling out this whole greenwashing thing, and is it really kind of effective or not? So
I think you're referring to when Elon Musk said Tesla's not considered ESG, but Philip Morris, which is a cigarette producer,
right,
is in the ESG screens.
Or even like Exxon Mobil. Like, I mean, some ESG screen even today, like they score them high. So it's one of those things that kind of became obvious that could be gamed, and you could just kind of finesse certain parts of your business to pass these ESG screens. And so I don't know. I don't really know kind of where that stands and how that fits into this today. We try to, whatever we do, we try to align it with as much of what the user, our community needs are. Like we kind of work backwards from there. Like, okay, what are the specific concerns that the Muslim community have, and what are the big questions and areas of concern, and kind of working our way backwards from there to see what is the best way to address that. It's very easy to just kind of slap ESG and so on and so forth on these products, but I don't think that actually solves it at the end of the day.
Yeah, no, what's interesting also, Saad, is I wrote an article recently about, I think it was the SP 500 ETF, the Islamic version of S&P 500, and it actually performed better than the conventional counterpart over a 5-year annualized period because it had better investments, which were Sharia compliant, and it had less interest-bearing debt on it within its portfolio. So it is actually true that Islamic products can, this is not financial advice, please don't take it as financial advice, but like the Sharia compliant versions actually did perform better over a 5-year period than, say, the conventional one. So there is evidence to suggest that like Islamic instruments do perform well over time. But Saad, I just want to switch gears again and talk to you about being a founder of an Islamic fintech. We've had a few Islamic fintech founders on and a couple of the investors. What's it like running a fintech like this, since 2020, 2021? How have you found this process so far?
It's incredibly difficult to run a consumer app business in the first place, and then if you're kind of within this niche of Islamic fintech and still being largely consumer focused, there's a lot of challenges that come with that. And when we started, I think around 2020, 2021, the markets were really hot, and fintech was also very hot. And just generally, startup investment was at an all-time high. I think a lot of our early success came from that, just from like being at the right place at the right time. And then very quickly we got, hit in the face with reality of like, all right, well, when things start to slow down or kind of the markets are tanking and, startup investing has slowed down, now what do we do? Like now that's kind of when we really need to get our act together and perform. And so I think a lot of companies went through that stage. A lot of companies didn't make it past that stage, unfortunately. And, we were fortunate enough to survive through that. And then, I would say in the last 18 to 24 months, it's been pretty transformational for us as a business. I think it's not just because of the markets rebounding. I think that's certainly one thing, just because our product is obviously very closely tied to the stock market, right? So that's one part of it, but also that we just really got super focused on aligning our product with the actual needs of the community, right? As a founder, you're always going to have your perspective and unique insight of the world, and that's kind of what allows you to create something that didn't previously exist or solve it in a certain way that didn't previously exist. But I think if you get too hung up on that, you lose sight of what people actually want at the end of the day. And so the last 18, 24 months was really us kind of aligning directly with that, listening very closely to what our community is asking for, what the needs of the market are, and then just building for that directly. That has, like I said, it has worked really well for us. Basically, we've continued to grow and hit all-time highs across the board, the last several quarters, and we've done it with effectively zero marketing spend. Like that's one thing that we're very proud to be able to say, that from day one, we've effectively never had a marketing budget. We never spend money on marketing, never ran ads. We did for a very short period of time just to experiment, just to see. It's funny because when you talk to investors like VCs and stuff, they'll ask you like, hey, what's your cost to acquire a customer? And we would say, well, I don't know, zero, like, because we don't do any marketing. So it's a good answer, but they still need to know, like, okay, well, what is hypothetically that number look like? And so because of that, we ran a little experiment just to kind of get an idea. But largely to this day, we've grown organically through word of mouth, and now through kind of various different content that we have on our website and different platforms. And it just goes to show that, there is still huge demand in this space, and you can build a viable business in this space. It has to be done a little bit differently compared to our conventional counterparts. Obviously, it's a much bigger market that you're talking about when it comes to the conventional space, but it's also, much more competition, right? So the one thing that's unique to us is, or kind of Islamic fintech, is there's not that many players, so it's very easy to stand out. Well, I don't want to say easy, but point is that it's a lot simpler to stand out in the Islamic fintech space than it would be in the conventional fintech space. And I mean, it's there's been ups and downs, a lot of challenges, but I think we're finally at the point now where we feel like we are we kind of understand what it is that we're trying to do, and kind of the broader vision behind what we like to be able to do and solve for the Muslim community.
How supportive do you find the Islamic economy ecosystem? Because we were speaking to Rafiuddin Shiko a few episodes ago, who's the CEO and founder of Dinar Standard, and we went through a lot about the Islamic economy challenges and opportunities. As someone who's operating in this space, how supportive or conducive do you find the Islamic economy space?
The answer, at least my answer, is that honestly, there isn't much support. There really isn't much of a ecosystem that can provide ongoing support to companies like us. That's not necessarily to. I'm not saying that to paint a negative sort of picture, but that's just a reality of it's not big enough yet. Like we're not spread across the world. There's like some hotspots here and there. If you're located in certain regions, maybe you have more of a local support system. But for someone like us, based in the U.S. on the East Coast, like we're one of like 3 or 4 or 5 Islamic fintech players in the entire country, right? And so I think there isn't much of that support system here. It's very much trying to kind of figure things out on your own, and a lot of it is also uncharted territory, right? I mean, it's there's not that many examples of successful companies that you can point to or take lessons from, right? So I think everyone is still at a stage where they're trying to figure out how to get to that next stage of growth. And so I think maybe a decade from now, I think we'll have more clear examples that we can point to, and perhaps a stronger ecosystem that can support these companies. But I would say today that really doesn't exist much for us.
And Saad, what's your vision for the next 5 to 10 years? Do you think? You talked about the future. Do you see increase in halal investing, or do you see more opportunities for Muslim investors?
Yeah, I think definitely, both. We're still surprised on a daily basis about, how many people still don't know that, how many Muslims still don't know that this is a thing that exists, that, there is this idea of, Islamic, based investments and finance, and I think there's a lot of people out there who are interested but don't have access to products and services. And then there's a lot of folks who don't know that it exists, but if they knew that it existed, they would be interested. And so I think there's a lot of work to to that needs to happen. We're doing our part. The other players in the space, they're doing their part in terms of just reaching more and more people and helping them understand that that these types of products are being worked on and need to be supported. And so I think ultimately in the next 5 years, we will be in a better position than we are today. And I hope that there are some strong examples that we can point to 5 years from now and say, like, look, these guys did it. Like this is, they were able to do it because they got the support from the community. There's clearly demand for it. They were able to deliver the needs of the community through this venture, and we need more of that. Whether that is across different areas of finance or kind of rethinking from the ground up what Islamic finance could look like if it were built from scratch, right? And I think that's where some very interesting projects are coming out of the crypto world. I mean, there's a lot of noise there, obviously, as well, but there are some interesting projects too that I think have massive potential. And I think just having that optionality is really important for Muslims, where they can, they're not forced into one product. I think that's what was the case like a decade ago when it came to investing. You're largely just kind of locked into mutual funds. And then I think over time that has opened up and diversified quite a bit, where now, even things like real estate has now been made fractionable, right? Where investors can access a small piece of a real estate investment, just like how we were able to fractionalize stocks. And I think we're going to see more of that, and just kind of seeing different options and different products in the marketplace, so that ultimately they can find something that aligns best with what their values are.
Just on this mutual funds thing, do you think that there's evidence to suggest that passive investing does better than active investing? Do you agree with that thesis?
Well, it's funny. Yes, we primarily serve people who are interested in managing their own portfolio, investing in individual stocks. But we've never ever, if we know a beginner like downloads Zoya and reaches out to us and says, hey, I don't know where to start, we always tell them, like, okay, you should go and park your money into like an ETF or mutual fund. Like, this is not for you. This is not meant for you. We're never going to say that this is better than index investing, right? You can get into the technicalities of whether or not index investing is actually good in kind of the modern context, and kind of where it started to versus where it is now, and kind of the holes in that. Largely for anybody who is new, who's just entering in the space, for them it is definitely better to start with an index fund, because the whole point is to get them started with something that is not that intimidating, that is easy to access, that doesn't require much work on their end. And so we always suggest that. And then we also help them understand, like, okay, well, what is Zoya? How does it differ from that? And so we want to be a product that is, kind of fits into your arsenal of tools, rather than, competing with ETFs and mutual funds and saying, oh, Zoya is a better way of doing it. So for instance, like, we've recently launched something called Zoya Direct, which is essentially a kind of built upon another feature that we introduced last year called baskets. And the idea behind baskets within Zoya was that, we recognized the fact that we had a very wide range of different types of investors using Zoya, right? So we had on one side of the spectrum complete beginners who have no idea where to begin, and on the other side of the spectrum you have like kind of advanced traders who are actively using Zoya on a daily basis, and so on and so forth. And so the gap that we noticed was that there were folks who said, look, I love the idea of ETFs and mutual funds and such, but I'd like to be able to have some control. I don't feel comfortable with all the companies that are in this fund. I'd like to be able to create something that is sort of like that fund, but doesn't have these 3, 4, 5 companies that either I'm overly invested in already through my other portfolios or through my other funds that I'm invested in, or because they just don't align ethically with what I'm trying to do. With Zoya Direct now, what you can do is essentially generate a basket that mimics any ETF, mutual fund, or index that's offered through our platform. So you can, for instance, go to the S&P 500 ETF, SPY, and you click on buy. And instead of buying SPY directly, it'll give you the option to say, hey, would you like to create a custom basket of the holdings that are within SPY, but filtered for Sharia compliance and any other sort of filters that you want to apply. And so now effectively you can create your own ETF within Zoya. So you can create this basket that mimics that ETF and you invest in it just like you would invest in an ETF. So we'll rebalance it for you. We'll set the weights based on the original weighting strategy. And then you say, I want to invest $500 in it. And we'll distribute that across the entire basket and help you manage that over time. So that level of sort of control is, I think, what investors want in kind of today's marketplace. And so it's not to say that ETFs are bad and individual stocks are better, but what if you can marry those two concepts and still have some place to start where you don't have to figure out which stocks you want to pick. You can start with a fund that already has a strategy in place, but just create your own flavor of it that's customized, specifically for you. And that's been, a super successful, I would say, feature for us. Something we see a lot of demand for, a lot of activity in terms of the amount of baskets that are being generated and invested in on a daily basis.
But Saad, a skeptic or someone more practical would say, okay, that sounds great, but what about liquidity? Because in Islamic finance, everything's about liquidity. Liquidity is always an issue, whether it's sukuk, whether it's equities. They always say that liquidity is very thin in Islamic compared to the conventional. How do you address something like that?
Well, I mean, the Zoya Direct feature, solves that directly. If liquidity is your concern, the concern is from the standpoint of like investing in a Sharia compliant ETF, right? For instance, where the volume, the daily trading volume is much smaller than your conventional ETFs that are out there. And so if that is actually your concern, then Zoya Direct is perfect for you because now you're buying the underlying securities rather than the ETF. So the basket is just like a synthetic concept that exists within Zoya. It's not a real thing. It's really just how we're grouping all those underlying securities together in a way that is easy for you to buy in sort of one go. And so the liquidity of all those underlying companies are the same as, what you would, if you were to go buy Apple directly or whatever, that they're highly liquid. And these are US stocks, right? That's kind of our primary focus for the baskets feature for Zoya Direct right now is it's limited to US stocks specifically and US based ETFs and mutual funds. But that's the advantage there. So that solves your liquidity problem, kind of by default.
And what about the expense ratio?
So you bypass the expense ratio too. So that's the other thing. Because we're unbundling the ETF, the basket that we offer does not have an expense ratio tied to it. In fact, legally, we can't charge an expense ratio because we're not an investment advisor. So you bypass that as well, and you're only paying for Zoya Pro, which is our premium subscription, and that costs about $10 per month. That's like a flat fee, right? So you're not paying a percentage of your assets.
Why do you think the universe of these ETFs, Islamic ETFs or Sharia compliant ETFs, is still quite thin compared to, say, the wider conventional? I mean, for the incumbents, it doesn't seem like a lot of work making a subset for an Islamic one. So, but why is it difficult, or why are we not seeing more ETFs, Islamic ETFs, on the market?
Yeah, I mean, it's just it's expensive to launch ETFs. I mean, it's not difficult, but to get something off the ground, there is a kind of an upfront investment of a few $100,000 to get it off the ground, and then of course the kind of the ongoing maintenance of it as well, all the compliance that's associated with it. There is a cost, but let's say that's taken care of. Launching the ETF is only one part of the problem. The other part is distribution, getting it, essentially marketing it, right? Like, how do you get people to invest in it? And so if you look at kind of the conventional ETF space, most ETFs, on average have, like, I forget the exact number, but it's like 20 million in AUM. Like that's like the average because there's so many ETFs that are out there. So if you just take the average, it's like about 20 million or so in AUM, and that's not enough for the ETF to survive. Like that's not enough for you to break even and kind of consider that a viable business. That's why a lot of these ETFs they shut down after a couple of years if they don't hit a certain amount of AUM. So that's a tricky part, right? So it's like how do you get it out there to people? If you look at the existing sort of landscape of Sharia compliant ETFs that are out there, at least in the US, they were either at the right place at the right time, they were first to market, or they had, for instance, like Wahed, right? They had their platform that they could offer that ETF through. Right? So they already had an audience, they already had customers, they already had AUM. When they launched their ETF, they essentially, moved those customer funds into that ETF, and that gave it that initial bump. So I think that now that it's been a couple of years that some of these ETFs have been around, and we've seen the demand for them, and we've seen the growth in their AUM, like SPUS has crossed, I believe, 1.5 billion in AUM. I think now people are kind of getting a little bit more serious about it and considering launching more products because again there's a bit of a track record, right? Prior to that there wasn't a track record, so it was kind of difficult to make that bet, but I think now it's becoming a lot more obvious.
Does the tax treatment also impact that as well? Because I remember someone telling me that the tax treatment in different jurisdictions also impacts the funds as well.
I can't speak too much to that. I think with ETFs are actually it's interesting in the sense that if you compare that to something like Zoya Direct, which is effectively a direct indexing offering, if you are concerned about taxes, let's say you're investing a large amount of money, ETFs are not tax efficient when it comes to things like tax loss harvesting and kind of finding opportunities for various different kind of tax loopholes and such. So for folks like that, they actually prefer to do direct indexing, which is again what I described. So you're buying the underlying securities of that fund and not the ETF itself. Because then if a certain company performs poorly, you can sell that and then buy more of the one that is performing better. And there's like all these different kind of ways you could do tax loss harvesting and such. So that's effectively a better tax efficient sort of process than buying the ETF itself. But I think for general everyday investors, I don't think that's a relevant concern. I think for them is just kind of having access to it through the brokerage platform that they're using, and then it being kind of reasonably priced, right? It shouldn't be something insanely expensive compared to the conventional counterpart. I think it just, as long as it's reasonably priced, I think that's enough for the majority of investors to consider it as a viable investment option.
Saad, tell us any projects you're working on, any upcoming projects you may be working on.
Yeah, I mean, we literally just launched Zoya Direct a couple of weeks ago, so we've been very much focused on that. It's been very exciting to see the demand for it, and it's really exciting to also see which types of ETFs are people interested in, right? I think that's one insight that we're able to extract from this because obviously, if we see that, for instance, people are going into high dividend focused ETFs and replicating them via Zoya Direct more often than some other ETFs, we know that there is a opportunity there for a new ETF to be introduced that is focused on Sharia compliant high dividend themed ETF. And so, there's a lot of different directions we can take that into. And right now, we're just sort of heads down focused on, how do we improve the platform to essentially empower Muslim retail investors with the tools that they need to succeed. And so we've done a lot of interesting things through baskets and now Zoya Direct and the multiple methodologies. And there's a number of other things that we want to look at that, kind of expand or go beyond just investing. I think there's a lot of areas within wealth management and personal finance that could be addressed. Kind of, I would say, makes sense in the context of an app like Zoya more than something else or something, kind of independent. And so we're exploring all those ideas. And I think over the next couple of years, hopefully Zoya becomes kind of a household name in the sense that it's relevant to you no matter where you are in your financial journey, whether that's on the investment side or whether that's something else. We'd love for kind of Zoya to be present in some shape or form, helping you navigate that.
And what's the best way for people to find out more about Zoya?
The best thing to do is download our app, sign up. You'll get our emails and all the various different updates that we send out. Follow us on social media. We're on X, formerly Twitter, at Zoya Finance, add us on LinkedIn. And then you can also follow me directly as well. And that's the best way.
I'll link it all in the show notes if you send it to me afterwards. But Saad Malik, this has been a really great conversation, a really fascinating and insightful one. I think a lot of people will enjoy this episode. But yeah, thanks for coming on the podcast.
Thank you, Hassan. My pleasure.